In this video I'm gonna walk you through step by step how to get started with day trading and make money from scratch, even if you have zero experience. But before we dive in, let me be honest with you. Trading, it's not a game. If you jump in without knowing what you're doing, it's just a matter of time before you lose everything, every single cent. That's why I've put together everything in this simple guide to show you how day trading works, how to manage risk, all tools that you need, and the basic strategies that profitable traders are actually using on the market. But first, start with the most obvious questions, especially if you're a beginner. What is day trading? Let's begin with the basics. Day trading is a simple strategy where you buy and sell financial assets, like in this case cryptocurrencies, in a single day. In crypto, you will be trading digital assets, like in this case Bitcoin, Ethereum, Solana, Hyperliquid, and others. Your goal is simple and clear: make profits from small changes on the price without holding positions overnight. And this is so different from other trading styles. For example, swing trading involves holding those assets for a certain amount of time. For example, 1 day, 2 days, even 1 week, or even 1 month. With swing trading, you're betting for the future growth. Day trading is fast-paced and is requiring you to monitor the prices every single moment, so closely to make quick decisions. For example, in day trading, you buy Bitcoin at $50,000 in the morning, and in the afternoon you sell this Bitcoin in $50,200. This is day trading, fast and looking for short-term gains. It sounds simple, but it requires skill and especially discipline, which we'll cover later. It's important for you to not mix up terms, okay? If you are day trading, you are day trading, and if you are swing trading, you are swing trading. Don't try to do both at the same time, because maybe you get lost. So let's say that you're starting, and how much money do you need to start doing day trading? Unlike stock market, which prices are not changing that much, and you would need for the minimum at least $25,000 to start doing real money, in crypto we have no strict minimum. In fact, some exchanges let you start with $10 or $20, but at the end your gains will be literally pence. As I said, starting with this tiny amount of monies will be tough, and trading fees can literally eat your profits. And obviously with this tiny amount of monies, it's so difficult to manage your risk, because literally you're not risking anything. So experts often recommend starting with a significant amount, like for example $1,000 or $5,000. Not too much, but not too less. Especially when we go to risk management, at the end you wanna be feeling emotions with that money. Because if you're trading with $10, you don't care losing it. But if you're trading with $5,000, you're probably caring about losing that money. Obviously emotions are bad on trading, but also if you don't feel anything because $10 are nothing for you, your trading will be unrealistic. So between $1,000 to $5,000 gives you enough capital to make different movements, take multiple positions, cover risk, and obviously practice a proper risk management. But obviously only trade money you can afford to lose. If you have $5,000 in your bank account, please don't put everything on trading. Start with a tiny amount of money. If you have $5,000, you could start with 500 or 1,000, but not 5,000. You have to keep in mind that day trading is risky, like all market, and many beginners start losing money before they profiting. And I want to tell you something: your first money you'll probably lose it. Don't expect to get rich overnight. This is a long-term process and you have to keep learning every day. Think of it as a skill that it's building over the night, every day. Just working. But to trade effectively, you need the right tools. And we'll need here one tool for technical analysis and one broker, on in this case we are talking about crypto, so we'll need one exchange to trade effectively. And be careful about exchanges and brokers, because most of them are manipulating the prices and the order books, so this could make you lose money, so be careful where you're trading. On my case, I recommend using Bluffin. This is a centralized exchange launched on 2023, and it offers spot trading, futures trading with a lot of pairs, including Bitcoin and Ethereum obviously, and also has the best liquidity I've seen on this market, liquidity and depth on the order books. And that's important because if you want to trade Bitcoin, you want to trade it on a liquid market. As more liquid is the order book, better is gonna be your trading. Bluffin also has cool features like, for example, copy trading, where you can mimic experienced traders' positions, and also Bluffin has a partnership with Fireblocks, and this is so important for you because you want your assets to be secure. We don't want FTX 2.0. For charting and analysis, I recommend TradingView because it's the basic tool that everyone is using. Obviously, you can make the technical analysis on Bluffing, but if you want to take it seriously, you should be doing your technical analysis on TradingView and then your operations on Bluffing. TradingView is a must-have. It's the most powerful tool for you to make technical analysis. It provides real-time data, customizable chart, and a community of traders sharing some ideas. It integrates with some exchanges, like for example Bluffing, so you can open the Bluffing chart on TradingView, and that makes you so easy to analyze price movements. So your toolkit for trading, it's so simple, you don't need much more. TradingView for technical analysis and Bluffing to execute those trades. I recommend you to spend like 5, 10, 15 or even 25 or 30 minutes exploring those tools, learning how to use them, because at the end this is gonna be much better for you because you're playing with your money. So please, just take your time, don't be a rush. Unlike stocks or forex, crypto markets don't have opening hours. Crypto markets are open 24/7. This means that you can trade anytime, morning, night, weekends, when you want. But you have to keep in mind that not every hour has the same opportunity. Some research suggests that crypto trading is more active when the stock markets overlap, especially between New York and London sessions, from 2:30 to 4:30 p.m. UTC. During those hours, liquidity and trading volume is much better, and it creates a lot of opportunities, especially for day traders. If you're doing swing trading, you don't care that much about this information, but if you are doing day trading, you want to be especially active in those hours where the volatility is on its highest point. Can also see spikes during those hours on certain coins. Price swings can happen anytime, so stay flexible. Compared to other markets like forex, stocks and other, which offer tighter spreads and have certain hours open, crypto is 24/7, and this has a unique nature and high volatility that make it unique but riskier. So focus on crypto for now and choose that suit your schedule and market activity. You have to figure out which is the best time for you. But before you know how to trade, you have to know how to do the technical analysis. So I'm gonna share with you some terms that you should be familiar with before even depositing any dollar on your exchange. First term, it's bid and ask. And this is crucial for you if you want to understand how an order works. You have to know that the price of an asset is the medium of the bids and asks in any single order book. So bid is the highest price someone would pay, and ask is the lower price a seller could accept. The difference between those is the spread, which is your trading cost. You buy at the ask and you sell at the bid. Then if you want to do day trading, you will be probably doing leverage trading. This lets you use more money than you have. For example, if you have $1,000 and you put a trade of $1,000 at 10x leverage, you will be opening a $10,000 position. It can boost your profits, but can also magnify your losses, so use it carefully. Everyone on this market uses leverage, especially if they are doing futures trading, so don't be worried about it. You will be definitely using leverage, but you have to use it carefully because a lot of people I've seen on my life, it's been losing a lot of money due to the fucking leverage. Because at the end, leverage, it's likely casino, and a lot of people feels so powerful because they are using more money than they have, and this sometimes ends up with high losses. Then we got different order types. We have market order, limit order, stop loss order, and take profit. Market, it's simple. If you want to buy on market, you will be buying the first ask on your order book. If you put a limit order, you will decide which could be the price you want to buy in. And then stop loss and take profit, it's so useful for you because this lets you limit how much money you want to lose and how much money you want to gain. And if you're using futures trading, you definitely want to set stop losses and take profits on each trade. A trader that is not using stop loss or take profit, it's not a serious trader. Okay, so technical analysis, it's basically studying the price to predict future movements on the price. So now I'm gonna share with you my analysis on this asset called Hyperliquid, and I'm gonna show you the basics on how to analyze a chart properly. First of all, we will start showing you what is a support and resistance. Support is a price level where a falling price often stops and where it bounces, like a floor. Is where a rising price trends to stall like a ceiling. Identifying this helps you to find entry and exit points. And this is not searched by magic, okay? If you want to find them, you should be using something called backtesting. For example, this is a chart of hyperliquid, okay? So here on that chart, we are actually able to see which are the prices where the price is stopping and where the prices is stopping, okay? So it's so easy. Here we will be using this tool rectangle to show you which could be the resistance levels and the top levels. For example, here we see a clear support level. Here on the $20, we've seen that the price is been stopping so hard after this fall from the all-time high that hyperliquid made. After a 40% down, it stopped here. So we have seen that it stopped 1 time, 2 times, 3 times, 4 times, and 5 times. Here we can see that it stayed a lot of time before going down. So this is a clear resistance level because, as you can see, it fell down, it came back, it gone down, came back again, gone a little bit down, and then when it broke it, it went at 100% up. Okay, so this is definitely a clear support and resistance level. You have to know that, for example, this is a support level, but if it breaks down, then it becomes a resistance level. It happened the same here, okay? We have seen that this has been a resistance level when the price has been topping 2 times, okay? So this is also a clear resistance level. Here happened the same, but when it broke down, it became all-time high, okay? Then we have other places that are actually good points, like this one, $30. This is a psychological level. All numbers like 10, 20, 30, 40, 50, all them are usually emotional levels. And here we can see that the price stopped 1 time and 2 times. And also here, it was the level where the candle stopped going up. So this is also a resistance and support level. It's actually a support because we are above it. So now imagine that you're looking for trading levels or you're trying to buy on spot. It's easy. If you wanna set along, you should set along here if the price comes here, if the price comes here, and if the price comes here. And we have seen it many times. Look at this. Price went here. If you set along here, the price is going up. Same here, okay? So you have to use resistance levels to set your trades. For example, same here. This is the bottom, okay? If you set a long on $10, this is also a support here. So now on the chart of hyperliquid in daily, we've got these 4 big supports. And finally, we've got this resistance here because it was the all-time high of the price. Then also you have to know how to use trends because prices are moving in trends, bullish and bearish or sideways. Spotting the trend will help you decide whether to buy or sell. For example, hyperliquid here, it's on a bullish trend line. It's so easy. If you see, it's doing new hikes and higher lows. To spot a trend, it's so easy to identify. For example, it's on a bullish trend, but if the price is looking like this, it's on a bearish trend line because if you see, it's making lower hikes and lower lows. This is what we should be focused now, spotting the lower and the higher hikes or lows. Then we should also look for patterns like triangles or head and shoulders patterns, but I don't like patterns when it's time to trading. I just like to use volume, resistance, supports, and RSI. For me, chart patterns are so famous, but they don't make sense in my opinion. For example, I like the RSI. This is the Relative Strength Index. It ranges from 0 to 100, above 70 suggests that a coin is overbought and may drop, and below 30 it means that it's oversold, may rise. And you can analyze also the trend of the RSI like the price, and you can find some different confluences between them. For example, the RSI on hyperliquid was on a bearish trend line, as you can see here, but it's actually breaking it. So as soon as it breaks it, may lead to a new hikes on hyperliquid chart. For example, this is Bitcoin, and here we have the volume. Volume is so important because volume means how many people it's buying and how many people is selling. For example, if the Bitcoin price is rising a lot, but it has low volume, it means nothing because it says that there's not much people trading Bitcoin and this price jump it's made by a few amount of people. But if, for example, Bitcoin is doing a really good movement and there's a lot of volume, it means that a lot of people is deciding that the Bitcoin price should go up. So as much volume, better is gonna be the movement. Technical analysis is not perfect. Here you're trying to guess which will be the next movement of the price based on the backtesting. But as I said, it's not perfect and you should combine these tools with other strategies to improve your decision. Technical analysis is based on the thinking that a price is gonna repeat its previous movements. So for example, if the price came back here to a new hikes, it says that, for example, when the price comes back here, it might be likely to do the same movement. So be careful. Now you know how to do technical analysis, but the most important thing you should know as trader is how to manage risk. Risk management is the key to surviving as a trader. Without it, you could lose everything so quick. And here's how to protect your account with some basics. You have to know how much risk you wanna take per each trade. Never risk more than 1 or 2% of your whole account on each trade. For a $10,000 account, it's $100 or $200 per trade. You think it's too less? Use leverage. This keeps your losses manageable. As I said before, always set stop losses to automatically exit a trade if the price moves against you. Obviously, decide your risk before entering any trade. Emotions like greed or fear can lead to bad decisions. Please trust me because it happened to me. For example, chasing a losing trade to make it back, it's a bad decision and often leads to big losses. Stick to your plan, take breaks if you're emotional, and avoid trading if you're stressed or you're having a bad day. If your girlfriend broke with you, don't trade that day. Discipline is everything, and successful traders focus on the long-term gains and consistency, not quick wins. Okay, so now you know how to do technical analysis and to manage risks. So let me share with you some basic and beginner-friendly strategies for crypto trading. First of all, we've got the scalping, and this is easy. Make a lot of small trades every day, holding positions for minutes or even seconds to catch small price changes. This often is used with really high leverage and it's intense but can add up. Also, you can use the breakout strategy. Trade when the price breaks through a support or resistance, expecting it to keep moving on that direction. For example, if Bitcoin breaks the $50,000 resistance, you could make a buy to follow the trend, because maybe if Bitcoin broke this resistance means that it will be going up again. Or also you could be trading the reversion, and this means that you are betting that prices are gonna be going back to their average after a big move. If a coin is far from its moving average, maybe you should sell expecting a drop, or even put a short position. Choose a strategy that fits your style. Test it thoroughly and always manage risks. No strategy wins anytime, and if someone wants to sell you that, maybe he's trying to sell you a course. Focus on consistency. Then trading is as much as your mind as it is about the market, and emotions can ruin the best strategies. Common issues include revenge trading, because after loss you might be impulsively trying to make another trade to revenge and take back the money the market has made you lost. Overtrading is also a really common mistake, because for example you're on a bad trend, you're losing a lot of trades and you're trying to trade more and trade more and trade more to make more money and try to revenge of the market. Everything is related with emotions, I told you. And finally, holding losing trades, hoping that a losing position will come back and you're gonna cover your losses. This can lead to losing more money. And this specifically has been my biggest mistake on trading on crypto, holding losing positions. You have to feel that you're controlling everything. Create a trading plan with specific rules and follow it. Set daily loss limits, and if you hit them, stop trading that day. Take breaks to clear your mind, do sport, I don't know, do whatever you want, but take your breaks. And you should also practice mindfulness or some kind of meditation to manage stress, because this job requires a lot of stress management. It's a long-term gain and it requires a lot of discipline and how to manage your emotions. And also, if you are taking it seriously, you should create a trading journal to track all your performance since you started from now. Trading journal, it's like a secret weapon. It's a record of every single trade, and it helps you to learn and improve your trading. It should include date and time, cryptocurrency pair, entry and exit prices, position side, a reason for the trade. I mean, you have to explain why you decided to take that trade, outcome, profit or loss, and your emotions during that trade. Review your journal weekly to spot patterns, like which strategies are working better for you or when you are trading poorly. This habit, trust me, separates good traders from bad traders. It's like a diary for a trader, and trust me, at the beginning it feels like you're wasting your time, but when it's been 1 month, 2 months or 3 months using it, at the end this is gonna improve your trading a lot. This is like reviewing your performance every single day. Imagine that you're a football player and you watch your previous games to analyze how you've been working, how you've been playing. Now, you think it's a stupid thing? I mean, as far as I know, all football players rewatch their games to know what they done bad or what they done good. So please, do it because it will improve your trading so hard. Then obviously don't be crazy, practice before going live. If you don't have a lot of money, you should be using demo accounts. Never jump into trading with real money right away. Use a demo account offered by exchanges like Bluffin to practice with virtual funds. This will let you test strategies and let you be comfortable with trading, especially if you're starting. Practice until you're consistently profitable on your trading demo account, ideally for some months. But remember, demo account and real account are not the same, because on demo account you're playing with virtual money, not your money, so you're not gonna feel anything, you're not gonna feel emotions with that money. Real trading involves emotions that demo trading doesn't, so please don't get crazy if you're getting good profits on your demo account, because then you're gonna start trading and you're gonna lose everything because it's a whole completely different game. And I've seen that a lot of times, people that is winning a really good amount of money on demo accounts, is doing good trades, they are doing well, but then they jump to real money accounts and they lose everything. Why? Because then they start feeling emotions because they are losing their money. And that's the main reason why I told you that you should be playing with money you can afford to lose, because the goal is feeling as less emotions as possible, but you will feel them. It's impossible not to feel anything, especially if you're starting. So let's wrap common beginner mistakes before ending this video. 1. Unrealistic expectations. Don't think that you're gonna get rich quick. Treat trading as a skill that is developing over the time. Be patient and focus on learning. 2. Over leveraging. I've seen that a lot of times. Using too much leverage will wipe out your account, and that's it. Start with low leverage if you're a beginner, like 2x, 3x or 4x, no more. Not following a plan. Trading without a clear strategy is not trading, it's gambling. Create a plan with entry and exit rules and stick to it. Don't ignore risk management. Always use stop loss and also use a tiny amount of your portfolio on each trade. Don't get crazy. And finally, chasing losses. Don't trade impulsively after a loss. Take your time, go to the gym, do anything, but don't trade after a loss. A thread where I will start trading with $100 and I'll try to convert it from 100 to 1000, step by step, using a strategy that you can start applying just today. Stay tuned on my channel because a lot of trading videos are coming. It might completely change the approach you have on trading from day one. So thank you so much for watching this video. My name is Joe and follow me for next videos. And don't forget to take a look on the previous videos because I've made a lot of them about trading and they might be useful for you. So thank you so much and see you in the next video.